All right, let's start with some basics of your wholesaler finances. So we're going to talk a bit about the chart of accounts, general ledger, financial reports, and a month-end financial process that you can follow. So first, our chart of accounts. This is really what's going to provide structure for your financial system. So this is the listing of all the income and expense, the assets and the liabilities that you want to track in your business. It forms the bones of your financial reporting. So whatever you have in your chart of accounts gets organized and grouped and ultimately will create your income statement and balance sheet and statement of cash flows. So we have some structure to our chart of accounts. We've got an account number, account description, so that we can properly organize all the things we want to track. Now here's just a look at, and I'll have this in the downloads for you, what the chart of accounts could look like. And you can go from very simple to very complex very quickly. What we have in our numbering system here, if I take salaries and wages for example, is we have a root account. So really what the root account is telling us is total salaries irrespective of department. In this account structure, we've got a 4-digit dash 2-digit dash 2-digit, and I'll kind of go through what the purpose of that is and how you can use this to organize and get more robust reporting. In this example, we're going to have the root account for 6,000, which is going to relate to any payroll-related salaries and wages. The middle section, this O1, is going to refer to the department. So in this case, I've got the selling department. That's going to be O1. So you might have O1 as selling, O2 is delivery, O3 is merchandising, however you want to set it up, but you can organize it that way. And then this next section here might relate to different locations or warehouses or businesses that you might have, so that you can keep everything separate, but then you have the ability to roll it up. So what this does is allows you to run your financials. So you might just want to see everything related to payroll irrespective of department, or you may want to see all of just your sales or your selling department, or you might want to just see all of one location. So there's lots of different ways that you can organize and structure. This is just one way to think about it. Your general ledger is the place where all your business transactions are going to get recorded. So every time you receive money or you pay money out, we're going to be recording it in the general ledger. Now this tends to kind of hide in the background, but I think it can be very useful in terms of identifying potential cost-saving opportunities. So I'll kind of show you quickly how you can read and use this information to help identify those savings opportunities. So this is an example of, there's a really trimmed down kind of cut and paste of what your GL could look like, your general ledger. Now in this example, I've got my root account number, and right here might simply be the department that we're tracking and measuring. So here I'm just looking at maintenance as an example. And these are the different types of things you'll see in your general ledgers. What's the date of the transaction? What kind of transaction are we talking about? Is there some sort of reference number that can, in this case, maybe reference me back to an invoice? Who's the vendor? What's the description of it? And what's the expense amount? So here, we've got cleaning and monthly monitoring and whatnot, and we've got various amounts. So in the notes section, we can kind of go through and just make sure we understand what these expenses are. Ask a few basic questions. Did we authorize and approve the expense? Was it budgeted for? Does it match if we had a purchase order what we had agreed to spend, and things of that nature. So really what this does is it organizes all of your transactions under each of your account headings and gives you all those details. So you can kind of dig in and determine, hey, do we recognize these expenses, and did they flow through our proper process? So from there, we're going to shift to just the basics of your financial report. I want to fly through these now, and then we'll dig in a little further in the next module. But you've got your basic income statement, balance sheet, and cash flow statement. These are the three reports we want to run on a monthly basis. The income statement is just showing us the sales when they're earned and the expenses when they're incurred. So the income statement doesn't measure cash or cash flow in and out of the business. That's what our statement of cash flows is for. So the income statement is really just measuring those sales when they're earned. So when the delivery is made, the invoice is signed, that invoice comes back to the office, everything gets reconciled, irrespective of whether we got the cash. That's when we're recording that sale. Likewise for the expenses. We're not recording the expenses when we pay them. We're recording when we have an obligation to pay them. So when they're incurred and we have an obligation to pay. So that vendor invoice comes in. We've received the product or the supplies or whatever it's relating to. So we have an obligation to pay that. So we're going to record that as an expense. Now we might not pay that bill until, say, the next month. If we get credit terms, we want to record that expense when it's incurred. Now the balance sheet, in contrast, is listing all our assets and liabilities. So the income statement's got all of our sales and expenses. The balance sheet's all of our assets and liabilities. And this is really just saying, what do we own and what do we owe? What do we own? Those are our assets. What do we owe? Those are our liabilities. And the difference between the two is going to be our equity or retained earnings. So those are the things you'll find on the balance sheet. Your cash flow statement is, in fact, as the name implies, going to measure cash in and cash out. Now, as I described, your income statement really doesn't care about the flow of cash. It's only measuring transactions. So the job of the cash flow statement is to tell us what money came in, what money went out, what categories do these relate to, did our cash go up or down. So we'll kind of talk through what the traditional cash flow statement looks like, how you can read it, but also a more practical report that you might want to use for your cash flow reporting. Now, lastly, in our 101 section, I want to touch on the importance of a month-end financial process. So what I recommend is having a checklist of the steps that you're going to follow in order to close the month properly. So our goal is complete and accurate financials, and in order to do so, we need to follow a regular process to ensure that outcome happens. So this is an example of a month-end checklist you might want to borrow and use. Again, we'll have this in the download section, where we're just listing out all the things we need to do, the date that we need to complete them, who's going to do it, and then we just check off when they're completed. So there's lots of details to get into here, but the basic approach is we want to document what our month-end process looks like, get it down on paper so we can use this as a checklist, not only for our team that's doing it, but for training purposes. Maybe new people come on board and this will help. And this also really ensures that we're getting stuff done, the financials done by our deadline, because that's super important to make sure we can expect when the financials are going to be completed. So this is a checklist you might want to download and adjust so that it fits your business.